Okay, how's it going, everybody? Welcome to a capital hungry breakdown on XAU USD. So of course, we all know that gold has been extremely bullish, and we know why it's been bullish as well. We just had the previous month close off, the month of July, a very strong bullish engulfing candle, but we are coming into some all new all-time highs where I'm just looking at previous historical repetition. We did peak all-time highs for the first time post 2008 crash. You could see that there was a heavy pullback after that happened. So what I'm just looking at right now, as this new month has already created a pretty significant top wick, and we've had such impulsive moves pretty much for the last 3 or 4 months, is the potential for a deeper pullback and buyers to liquidate some of their gold long positions, possibly as we have the US dollar gaining some strength in the short term, and we have a lot of potential for trade talks between countries, which can bring some positivity or some short-term strength for the US dollar as well, and possibly give some optimistic view where it can give more reasoning for buyers to close out some of their positions and to get that bigger pullback before we see the next buy wave up. So when I was just looking at the initial reaction of what happened in 2011, and I think it's just more of I was either thinking we were going to peak at 2000 on the dot and then have like a solid pullback, or the all-time high we are at now, just because I think when you're coming into what I like to call no man's land, a lot of psychological levels get triggered as well for buyers, because they don't really know when it's going to stop. You get a lot of uncertainty when you're coming into areas where there hasn't been any previous price sensitivity. And we had this massive reaction before where obviously gold started consolidating for months, but you had a massive correction of that upside move. I'm not saying we're going to get a higher time frame signs of an economic rebound just yet in a full correction all the way down of this upside move, but we have to consider that for the last at least 6 months, gold has done a major run of almost like $500 per ounce. So it would make sense to get some relief at this new all-time high and psychological price level, especially for this new month to correct some of this upside move. And especially when we zoom down the time frames, and I'll show you where we're rejecting on an intraday perspective, it's been around the same high point where we're getting some candle closures. But yeah, we got pretty close to 2000, hit around like 1990. So I personally think just 2000 is a very strong psychological price level for investors, just because we've never hit those prices on gold before, where we would get a very strong reaction. But gold is a bullish beast. So I am looking to see if gold can give us that. I know it seems large, but when you're looking at the grand scale of things, a pullback to 1915, 1920, the previous historical highs, or these candle body conjunctions around 1827, when you're really zooming out, it would just be a correction of this overall extended upside move, about a 50% correction of the move from the last consolidation period around here, where you had about $450 of upside. So you come down here, it'd still be around 150, even $200 drop to around the 1780s would only still be around a 50% correction of the overall impulsive move. And why I'm measuring it from here is because that's where we had this liquidity generated before we had the impulsive move. And you can see we had this liquidity grab there too. That was the last bearish candle that grabbed liquidity right in this area. And then you have this extended upside move since then. So I'm basing the upside move from there. So to get some 50% correction and come to the 1820s would be ideal for more buys. But of course, any market fear that continues to help inflate the price of gold, as well as global interest rates being low, gold can easily continue its train into the 2000s. So we have to watch price action and market sentiment intraday accordingly, right? We have to watch the changes. But for this week so far, I'm seeing more talks between various countries as per trade deals, and that can start to bring some optimism and boost equities and give the US dollar a boost as well if there's any good trade talks between the US and the UK this week. We can also see the US dollar corrected some of its downside move from last week and is still starting this week fairly bullish as well. I don't think this is I don't think there is really any any actual fundamental play behind this besides that concept we have been talking about buy low, sell high. And dollar has been melting and come to a low point around 93, 92 flat. So we are getting that reaction there where even if the dollar in correlation can give us a pullback to like 95 and still be in bearish market structure at the same time gold can give us that pullback, it would make sense to me with that correlation going on as well as it's become more relevant. But it's a new month. Nothing too crazy has happened so far, like over Asian session or London session. Actually, the crazy thing was the gold spike I sent you guys when the market opened. I don't know if anybody saw that, but on the Owanda feed, while I was watching it, and we'll come back to this. Or I'll just bring it up from Banter. Let's see. This was pretty wild because I was just watching it live and this candle, like I know it's a minute, but it happened within a second. Like it was like a flash. Even I was like, whoa, I haven't seen something like that before ever. Like it initially pushed up to 1981 and literally within a snap of a finger, it just died to 1960. And then it was hovering around here. Another snap of a finger, when this candle opened, it instantly opened here. Like it was just crazy. But yeah, besides that, nothing too wild has happened. And we already have our key levels and stuff mapped out and some zones up to 2000, but we're just going to look at the market structure and everything and how it's developing so far. Every time frame looks extremely bullish, but I do like how there was a smaller wick on this bullish candle, and especially how this candle had minimal order flow to the upside, and this seemed like the final long squeeze in this massive upside move after all this liquidity has been generated. And now for this new week and new month, we've already peaked a top wick that was higher than the previous wick, and we're already showing some signs of potential correction. So you can see if we can get a mix of some bearish and bullish candles, very similar to like how we get here in these periods, but then actually break the intraday bullish structure, right? Then we can possibly get more signs of correction of this upside move down to 1915. And then we would, of course, watch intraday price action to see if any support is being formed, how market sentiment is looking, and this could potentially be a nice buy. Otherwise, I do see the potential to come deeper into the 1820s for that new month. And the main reason for that isn't anything. It is fundamental in the sense that I'm looking for some historical repetition of how investors previously reacted when we came into quote unquote no man's land in a new all-time high after an aggressive rally, right? Like this is an aggressive rally that broke into a new high and is coming towards 2000 psychological price level. And like I said, the monthly already created a pretty significant top wick and is showing us that signs of correction, right? Potential for correction. The main focus I'm looking at this week, I know coronavirus stuff is still active and we do have the potential for a second wave, but it's still nothing globally impacting yet, in my opinion. I think this week we're going to be more focused on some of these trade talks and don't forget about the US China stuff going on as well. And I know this might not have a major impact, but I have seen some headlines, which I'll send you guys, about India. And India, you have to understand, is a major gold supplier and a holder of physical gold, that they will be selling off some major gold holdings at a discounted price or something along those lines at cheaper rupees. But that can also start signaling at some money being moved out of gold just for the short term to give us that potential pullback as well, as some countries selling off some of their gold holdings as well. But overall, gold has been extremely bullish. So I would need, like this, for example, this daily candle to close bearish. No more candles closing above these candle body conjunction points around 1975, signaling us that exhaustion and then that potential of breaking that intraday bullish structure, which we'll see on the 4 hour and 1 hour. And then we can possibly take that corrective short down to 1915, 1920, or you can wait for the buys. But that short play with that with that confirms of exhaustion at these all-time highs, I do see as possible, especially as the US dollar is trying to pick up that strength as well. So this is what I want to note. If we close back below these previous peaked points, like we're having this consolidation and resistance formed, that this general area, I know it's about like it's quite a large area. It's not actually for gold. It's about 50 to 60 pips in this range of these highs is a very, very significant point that buyers are consistently struggling to break above, meaning that if we cannot break above there again, the potential of breaking this bullish structure is increasing. And if we can come below 1953, I can see deeper sells down to those corrective points I was just telling you guys, like 1915, and then possibly like, sorry, I didn't mean to click that. And then possibly like the 1850s, 1820s, of course, because that would show me buyers kept failing to break around the same area, which is below our key level around 1981, already predetermined, right? We're getting more signals of that US dollar strength, and it just tells me that for gold to break this high, more liquidity needs to be generated, and liquidity liquidity can only be generated in two ways that we view it technically. Either consolidation periods where maybe gold won't break the structure or break below 1939 and it'll just generate liquidity and consolidate for an extended week or 2 weeks, then have enough buyer order flow and fail to break bullish structure and continue up, or a massive pullback where buyers jump in from better prices and you get more volume in from better prices, and then buyers jump in on that next rally, then there's enough order flow and like juice, I like to call it, to break previous highs, okay? But when we're viewing the charts technically, it's either seen as a massive pullback or a technical consolidation. But that's all that's really happening, is either in consolidation, order flow is being generated, in previous lows and structure is still not breaking. So that order flow you can assume is buyer liquidity, right? Or you would get that massive pullback and the market would move in that wave, create that higher low, and then generate more buy orders and then make its move up. But we are heavily overextended on gold. I have not been trying to call tops at any point, but I am starting to see some intraday exhaustion around our key levels and these previous high points. So we just want to address that. And I'm not seeing that as, and I just want to explain to you guys my point of view, because I'm not seeing that as a gold sell off on higher time frame. I'm seeing that as gold needs more liquidity to break these highs. So we can either, if we get a break of this structure, we know that liquidity is going to come from a pullback that we can take advantage of, right, between the ranges. But yeah, seeing some very, very bullish structure overall. Safe would be below, because then you're coming below these candle body points and the previous high points. And if we can get, sorry about that, I still have alerts active. Look, even these guys, like these are random people. 2000 is an important technical level for gold. It's not even an important technical level. It's just a psychologically important level. Yes, this guy knows. I don't know who this guy is, but you know what I mean? It is. Somebody said Euro USD false breakout. $19.13 would still be holding overall bullish structure if we got a pullback to this point and filled this wick range here. And that was where we were looking at when we were looking at the daily as well. Sorry, when we were looking at the 1 month. 1913 was around these previous wick points. Then 1827 was those candle body lows, where if we came down to retest 1827, we would be retesting the last point of consolidation where liquidity was generated, and we had that upside. But I see potential correction to at least 1915 in my opinion, especially if we break below like 1953 here. Yeah, NFPs this week. But a lot of the job stuff has been priced in. I was just seeing what else there is, like the non-manufacturing stuff. Okay, so we got US ISM manufacturing PMI, US jobs data this week, non-manufacturing PMI. So we'll bring those up accordingly. What was China's manufacturing last night? It was improved. That's good too. If China's showing improved economic data as well, can bring more faith in global economies, and investors can cash out of some gold buys at these highs and then jump in with more. What sort of sorry, I didn't see your question. What sort of headlines would we need to see to have a general sentiment of market fear? I would need to see more countries going into lockdown related to coronavirus. That's pretty much it. But as per trade talks, if you're talking about that, you just need to see Trump beefing the UK, saying, "Nah, we're not going to do that deal." But I personally think with a lot of these trade talks coming up, that Trump might either just keep it quiet or try to keep it more optimistic because elections and stuff. Or he was honestly trying to delay a lot of the trade talks past elections. He was even trying to push elections and change the elections date. I think he might keep it fairly simmered. But yeah, that's this week. U.S. Trade Secretary will meet U.S. officials in Washington next week. But I think that was meant for this week because the headline came over the weekend. So we'll watch that too. Yeah, if we break below 1953, we can take that down to fill this wick to 1912. This would be higher risk sells, a break and retest below 1965, but that would be breaking below previous high points and that bullish market structure. But it's higher risk because gold is so bullish overall, it can just snap back against you. But if we have a clean 4-hour break below 1965 and the next hours fail to break above, even if we start to make some structure like this, I'd watch that. So with that being said, just from this liquidity grab point and our key levels here, with potential to make that lower high before we continue down, I would only look for buys above 1971.5. Because then we're still above bullish market structure. We come back above this consolidation area and our key level, and gold overall is so bullish, right? I just want to see something quick. Yeah, that's not a big deal. Sorry, my mouse is lagging. And then this obviously would go up. I think would smash 2000. But otherwise, we're going to take it for that potential pullback. If we get that below 1953, and we still need more confirms of breaking the structure, that would be safest sells down. And I could see potential for a bounce from 1912. And of course, if we come to 1912 and don't have confirms of an intraday support being formed, we have more reasoning for gold sell-off, then of course we're gonna adapt to that and we'll adjust and go down to the 1820s range. But that's what I see so far. So any questions about gold? If no questions about gold, then I'm going to save this and send it over. I'll label it. Don't forget, it's a new month, early in the month. And that's what I see. Because I don't want to just try to be the hero calling major gold sells, but it is starting to finally signal some exhaustion, but it's just so fucking bullish. And my language is so bullish, you know? It's just been beasting on the bulls. Like, but it is like it is in need of a massive correction. I'm just waiting for confirmed that will break below the previous high points and then confirm this is sellers. Yeah, it's like it's a beast. And then I was waiting for if we can break this bullish market structure here, then below 1953, I could see that sell off to fill this wick range at least, and then give some of that higher time frame correction and that create that monthly lower wick, as we already had a monthly upper wick created so far. The only thing was, if you guys saw this headline, I sent it here. This was last week, of course, July 31st, before the thing closed, but investors put 3.9 billion into gold, the second largest amount ever, right? There's still heavy buyer orders and liquidity in gold. But I know this looks like, oh, there's so much money in gold that happened in the week, whatever it is. We don't know when these guys are going to cash out, because when these guys cash out, it'll cause a massive correction. Like when the big boys cash out, it'll cause a big correction on all those late FOMO buyers. Yeah. I can't see gold blessing people that easily still. Especially retail traders who are going to be jumping in soon, you know? Yeah, almost 70% of client. I haven't seen like 70% in one position from a retail perspective in a long time. And it's coming towards 2000, man. This doesn't like, it looks like it's going to do some deep pullback. Yeah, it's pretty high. Yeah, but we will do the opposite when we have confirmed to do the opposite. Just because I know a lot of retailers are long in it doesn't mean that like all these central banks and countries aren't still increasing their gold holdings. You know what I mean? Like look at gold right here. It's already like still this 4 hour still gonna close above like 1965 probably. Still a lot of time in this 4 hour left. You get what I'm saying? What confirms for me would be like that number of retail traders in buys goes to like 70%, and we get a break of this structure, because 99% of retail traders and the average person, they don't even look at market structure or understand like key levels or like, you know what I mean? They're not looking at where buyers are exhausting, or they're probably just looking at some indicators like, oh shit, the 200 EMA. But yeah, if we get that break below, if we get the break of structure, break below 1953, I can see a lot of those retail traders getting flushed out, because no retail trader can hold no $40 gold drawdown, destroy your account, right? And what happens is a lot of retail traders, and it's not like it's going to influence the market, but they'll keep trying to buy every dip, and then gold will just melt and keep taking them out. maybe we'll see like a one squeeze to 2000, then a melt, but we'll see. I'm sticking with this plan. If you really want to be safer for buys, you can go right above this medium term zone around 1975 because you're breaking above these candle bodies that are creating a flat resistance top on an intraday perspective. That you can easily get a squeeze up to like 1997 and 2000 from above 1975. In 1971, you're still above bullish market structure, and a safe sells below here.